I think a lot of times traders in their learning space, they pick up one style and then drop it and go to another style. And so it's like a salad bar kind of, and they never get a synergy about what might work for them in a certain time and space. It ends up being, a scope drift, and you don't really pull down into the core aspects of what you need to do. I think that's really, really hard for traders trying to find their own way. If you let the market be the teacher every day, and when you lose money and make money, sit back and go, what's the lesson? And some of us trade too dynamically to do that after every single trade. But if you find yourself in a pocket where you trade very quickly because that's just your style, after about an hour of trading, step back and go, what did I learn about today's market action that might be a little bit different to yesterday? Or are they still in the same game plan because of X, Y, or Z? And that is the key event. Just making sure that the lessons the market is charging you for, that you don't have to pay for them over and over and over and over and over again. If you can build a process where your anchor every day is, I want to see if I can position myself so I lose the least. If the wheels come off the bus, you're going to be hitting the gravy train sooner than you realize. It truly is. Management of risk is just so important.
This episode of the Speculators podcast is sponsored by Elite Trader Funding. Elite Trader Funding is an evaluation company that provides traders with the opportunity to earn income by trading in a simulated environment and never having to risk their own capital. All you have to do is pick an evaluation and follow the rules. Traders who pass the evaluation will keep 100% of the first $12,500 in profits and then 90% of all the profits after this. You can get started today with Elite Trader Funding by clicking the link in the description and using the code ETFKORBS for 40% off every evaluation that you want to do, except for the fast track. Those are already heavily discounted by default. Now, the most important thing about Elite Trader Funding is this is a company that you can trust. They're reputable, they're trusted by me, they're trusted by thousands of other traders, and they have a 4.5-star rating on Trustpilot. They have an active Discord community, they have incredible customer service, and they have the widest selection of evaluations on the market. So whatever style of trading you're into, they're going to have the perfect fit for you. They even have a swing trading option, which nobody else offers. We're gonna say more about this later in the episode, but a big thank you to Elite Trader Funding for sponsoring this episode. I'm very happy that you're here. Let's get started with today's episode. Anne-Marie, welcome to the channel. Thanks for stopping by. How are you?
I am delighted to catch up with you. It's been a little while. Yeah,
for sure. It's very good to catch up with you, and it's going to be great to get to know you here. A happy FOMC day. We were just talking about this a minute ago, and you had mentioned that you had traded earlier.
yes.
FOMC comes around very periodically. How do you handle a typical FOMC day?
So I try to be light and tight. So I'll go small size, and whatever the market's giving me, I'll take. I won't stay in for extended periods. Around the midday cycle, it gets a little bit more compact. Price actions will squeeze, but I have noticed that we'll spike on algorithms right after the release, settle in, and then once he gets on the podium, that's when things really start. When he starts taking questions and people start to parse through how he speaks, there's always some kind of Easter egg floating around in the price action. And then the follow-through days are normally tomorrow and the day after.
Yeah, very good. I have a very similar approach. Try to keep things very light and tight. My best case scenario for an FOMC day is to build just a small cushion, not do anything very risky in front of the announcement, and then potentially being able to take care of a little outsized volatility. It's wild to think about the Fed chair being as powerful as this man is, where if he gets on there and he just says, listen, we've had a good run, everything's terrible, it's all coming down, every single market in the world would just start to crash. And then if he just pops
Exactly.
back in and says, oh, I'm sorry, I misspoke, everything's really great, everything would just pop back up. It's amazing to think
Yeah.
that one person is so incredibly powerful. It's a
Yeah.
wild story.
You know I think what's super interesting is that the media has sort of amplified his ability to do that. And algorithms that focus on language spots to enter in and enter out are also driving that intraday volatility event. They're starting to do it with Janet Yellen. Maybe they've been doing it with her, but I notice a lot more algorithmic programs built on these language events and language media breaks into everyone. It's really starting to move the market quite a bit. So my thought is always, I've got the calendar up, I see who's speaking, and on days like yesterday, where I thought, you know what, we'll be pretty sideways, Yellen came out, said, hey, everybody's doing fine, but we've got some work to do. And then all of a sudden, the markets just started rolling over and they did not stop. So you just, if you think things are going sideways, the big thing to do is say, pay attention to that, the way you measure momentum. And whether that's a combination of a moving average and a momentum indicator, whatever it is, when prices start to break, you have to step back and go, wait a second, am I still in a range base, or have these algorithms taken over and significantly started moving price?
Yeah, this is, I think, a very difficult thing, especially it seems like there's different sections throughout the day, and it's very normal for the morning session to be doing something and a completely different story in the afternoon. And to your point, having that ability to just realize that this is a whole new game right now. We're shifting, something has changed. I can't be sitting here trying to keep pushing ideas that I had maybe in the morning, or even that context that I had in the morning. And you were talking about these algorithms, and this, I guess I don't actually know this, but I'm under the impression this is how it works. If you have anything to speak about, when somebody's speaking, like we're going to get the press release after the two o'clock announcement, and there's algorithms that are sitting there as he speaks. They're picking up on his words, and depending on what he says, they will then make decisions in the market.
That's exactly
What's
right.
happening?
Yes,
Yeah.
that's exactly right.
Yeah. Very good. So let me do this. Jumping into you a little bit and maybe just getting to know you a bit better. How would you describe your style and your method for interacting with the market?
So my style is very focused. And if I'm not focused, things go sideways for me. So I try to look at a simple approach by going top down. And so I'll say, all right, what is the market doing this week? And what is the market doing today relative to the week? And then what is price action doing on that 15-minute time frame relative to the day? And so I go from that top down and look at the big levels. And my tendency is to play mean reversion. Unfortunately, trending days give me the most trouble because I keep thinking that, all right, we'll do something natural and come into the mean. That doesn't happen sometimes. And so that's really the anchor of my work. And so I will look at what is the sideways motion today. Like we closed on the low yesterday. And so overnight we faded a bit more, tried to fill the gap. And now we're just looking at this sideways slosh. It tells me, hey, I closed at near the lows yesterday on many of the charts. So I'm looking for either a bounce that's going to fade and that's going to keep me in trend, or I'm watching for that close to get recaptured, at which point it's a whole new shift of traders because the sellers are saying, holy cow, I didn't want that to happen. And the buyers are saying, oh my gosh, finally I get to buy the dip again. And so I think people are still really addicted to buying that dip, and they're getting smashed by it just a wee bit in late days.
Yeah. Yeah. I feel like I'm talking to a feminine mirror here because I'm the same exact way, very contrarian, or very much mean reversion is my style,
Yes.
and trending type
Mhm.
action I just am not a fan of. From your perspective, when we are getting directional and you find that you have a hard time just joining that action, and when we're in that range and fading that action back to some kind of point of control or some type of value is easier for you. Have you identified why exactly that is, why it's hard to just go with the action and why you feel more comfortable fading?
It might be because I'm a maverick at heart and I just feel like going with the flow never feels good to me. And
Mm,
so I have noticed that it is a flaw because the more volume something rules in, it's almost like trying to pick up pennies in front of a steamroller. And so I have gotten into the space of going, listen, if you do that twice and you get stopped out and you're seeing yourself trying to trade mean reversion, then reset and then go down to, say, your 30-minute or hourly candlesticks and look at the risk that you might take getting long at an intraday pullback that follows with trend. And so I'll
hmm
tighten up the moving averages and then I'll say, all right, let's take a look at, say, a 14 or a 10 exponential. And if it comes into that, I'll go smaller size and move up. But I see a lot of people that can, I mean, hammer in when trend takes off and they can size up and make tons of money. I have a problem very transparently. Sizing up in trend motion is super, super tough for me. I love the scalp. I love the scalp trade that goes very quick. So it'll be sort of like I'll take maybe 3 times as many trades, but I'll get a nice big pile of cash and it'll feel comfortable to me, but it's still something that I'm trying to build in my toolbox. Hey, you got to get better at following trend. And I think every trader through their life cycle, we get to these places and we hit a plateau. And then we go, all right, there's more to be done here in what you need to get better at in your next approach. And so that's always my space of, all right, hey, this is trend. You could hit it and learn to hit size. Just be more focused at where the breakout begins so you don't feel like you're, chasing someone that's really far ahead of
Yeah.
the race and puts you behind.
Yeah, it's a great point in that as traders, we have things that are naturally to us and things that we can do well in the market. And in this realm of trying to pull money and earn from the markets, there are so many different things that we can do. And it's a big error to just get a hold of somebody and try to be that person,
Exactly.
where your specific style, even if it feels like, oh, I want to be a part of these big moves, and that kind of ego metric at times can keep you from making money, to where if you decide down and
Exactly.
realize that, I can take these smaller moves repeatably with higher accuracy, that's what I need to lean
Exactly.
into. It's
Exactly.
yeah. Learning more about you though, you mentioned, okay, you have a top-down approach coming into the market. Would you consider yourself a discretionary trader, or are you more mechanical?
Um, you know, uh, when, and this, maybe I'll make this answer a little bit longer because of what it entails. When I wrote my first book, I had someone from McGraw-Hill sit with me and say, hey, listen, do you trade strategies or do you trade systems? And systems are always non-discretionary. There's
Okay.
no element of, I wonder if I ought to take that. So it tends to be in an automated state. And so I would say I am a discretionary trader, but my trading is very strategy based. So if it's not coming into my support, I won't take it.
Mhm.
Well, I'm going to say won't is like mostly a dark gray. It's not black or white because
Sure,
sometimes
sure.
I do chase things in a couple of points. But if it doesn't come and the setup isn't sitting where I like it, I'll sit out. Now, a lot of times that leads to FOMO. because I go, Rod, that was fantastic. Why didn't I? And then I end up in that space of losing the bubble of total focus and, you know, trying to be completely transparent. That's the space that I will move in and out of through the course of a day because I'm not lasered in, right? I have all kinds of things going around me, my desk, whatever's happening. And so I have a tendency to have only these short pockets of pinpoint laser focus. And then the rest of the time, I'm like, oh, a bird. And so I get very much out of sync very quickly and have to bring myself in. So the quick answer to that is I am a discretionary trader, but very strategy based, very, very strategy based.
Yeah. And I think to me, this has to be the dynamic in trading to where there is a certain science that we can put with our analysis that is very structured and rigid, but trading is more of that art form where
Yes.
it's not black and white, and you have to be able to
Yes.
flow with what's going on and make those decisions in real time and perform at a certain level, which doesn't just involve clicking buttons like it was a program.
Exactly.
So, okay, discretionary trader, and you're actively trading in and out every day. Do you hold things for
Yes.
longer than a day, or yeah, just in and out?
Well, I
Futures.
have, yeah, sorry to jump. Go ahead.
No, no, please. You were
Yeah.
getting ready to say, do you do some long-term things as well?
Yes. So I've been trading a long time. So I have different kinds of portfolios. I have some long-term investment portfolios. I have short-term investment portfolios. I have some options that I do on short-term swings, and
Hmm.
I trade the futures and the futures options market. So because I have so many different things that I work on, I really run the gambit of saying, hey, okay, that doesn't look good, but this looks good. Volatility is really kind of messy here, but I know we're in a range, so I know I can sell some options. Let me see what I can do there. And so it's really a combination of those things. And because I've been around for so long, a couple of decades, I have a significant comfort level with what I do on the short term trading mechanics. And my husband works on the other side with me on those longer term investment portfolios. So it's a good tag team because I have
Yeah.
the attention span of a Cocker Spaniel. And so, as I mentioned, laser focus, 5 minutes off to the looking into the clouds the next. So, yeah, that's
Yeah.
really,
I
that's
think we're
really it.
boiling down your style of trading here. You're like a contrarian space cadet out here.
That's 100%. Hundred.
Hmm.
Hence, look at this. I'm in the space world, so there we go. Yeah,
Yeah, yeah. And I'm sure, well, people have a lot of questions is when did you become such a big Star Wars fan?
I know.
Oh, and I see some
My
Avengers in the
brother-in-law.
background too. It
Yeah.
looks like.
Yes, abs. And as a matter of fact, he's got life-size Iron Man on this side and a life-sized stormtrooper on the right. Yeah, this room, everybody loves this room, so it's
Sure.
fantastic. Yeah.
Sounds great. And how are you set up as far as a charting package? Do you use Sierra charts by chance?
I do not use Sierra
No?
charts. I
Hmm.
use Motive Wave. Yeah.
Yeah.
I've
Very
been
good.
motive I've used Motive Wave since they were in beta.
Oh, wow. Okay. Yeah, very
Yeah,
nice.
it's been a long time.
Um, and so as far as your party method, I know you mentioned some moving averages. What would be like the primary things you're focused on for your analysis tools? Is it moving averages or VWAP or profiling or?
Just pure price action. Where did we
Okay.
go last month? Where did we go this month? Where are we in relation to last month currently? Where are we in relation to last week? So everything's relative frameworks because statistics tell us that price action will range and then break for a little bit and then range and break for a little bit. And we're either climbing up a wall of worry or sliding down a slope of
Hmm.
worry. And so those ranges tell me, okay, this is where everybody tried to pick up price action last week. If it comes in there and I can see an option call wall or an option put wall that's sitting there, because I do use a lot of option analytics on the backside. If I see those walls there, I'll collapse in, because the wall doesn't mean we're going to hold there. So for instance, in the ES just several days ago, the call wall was 51.50. And everybody was trying to make a decision about what would happen at that 51.50. So you go there and you just watch the fight, and you collapse into maybe a 5-minute chart. And if it starts failing to head higher, it breaks a support, bounces and makes a lower high, you know that the call wall is intact. If the call wall breaks, all the dealers will have to go long, because they're actually they have to shift their gamma and their delta into negative formations, to neutral. And so as the call wall breaks, everybody that's short the calls has to buy the underlying instrument so they become delta neutral. And that's a fantastic instrument to look to see where the call walls and the put walls are during the course of the day. So I use that, and that's what tells me to move.
Yeah, very interesting. And you're describing a dynamic, I think, that if we can stress this for a minute, because it's very much been my observation, this is a very difficult thing for people to get while we're trading, is that if there is some kind of a level of interest, maybe it's a call wall, maybe it's something in the price action, maybe it's a moving average, anything like this, that we would expect to be potential support or resistance. That is all it is, potential support or resistance. And we will never, ever, ever know if that was support or resistance until after it's moved away.
Exactly.
And so the blind idea of, oh, this is a level I'm going to buy at, well, this is a potential area to do business. And then once we get to that area, being able to drill in and having the ability to understand what is actually happening and then make that decision to interact, or let the market show you that this is not in fact what you want to see, and then staying off of it. Yeah, I think that's a really nice dynamic you just walked through. So thanks for explaining it.
You clued in, you clued in to the anchor of how to trade around levels. You absolutely drilled right in and cleaned it all out. It's just a level, and you have to see how the people who are participating at that time are going to behave at that level. You can take a guess, but that's all it is. It's a guess. And so if you don't manage your risk, you're going to be upside down in the trade if it goes against you. And then a lot of people go, no, this is my level, and they'll double down. And then all of a sudden, everything they've made early in the day or early in the week completely vaporizes, because they stopped to say, wait a second, let me see who I need to follow, not let me lead what's going on here.
Sure. Now, when you were getting ready for the trading day, let's say before you sit down to trade, when you wake up in the morning, can you kind of walk us through what do you do before you get to the charts? Anything that would be important to you, maybe a coffee, meditation, whatever you do?
Yeah. So I am a Jesus freak. So I spend time in the morning doing my prayers and that sort of thing. I get up, and then I just try to be very still. And once I'm still, I like to watch the sunrise and drink a cup of coffee. And I live on the water, and so that's a great thing to do when I'm home. I get to do that. I absolutely love it. And then I just begin to scan the headlines. I'll look at the Wall Street Journal, I'll look at Bloomberg, and then I'll go, all right. And then I will look to see what pre-market action has done in the futures. And if there's something outsized, so let's say we had a big spike down and it completely recovered, the spike down tells me, all right, somebody fat finger to move, and they don't really want to go down there. And so I'll look for where that candle body actually has an open or a close on any kind of big spike candles. And I'll just go, got to watch that. And then I will look for the range. And once I see the range, I go, all right, let's see what trend is sitting in the range. Because you know the storyboard that says if a trend breaks by time and not price, it usually corrects into the direction of the trend. So that would be sort of like what a flag might look like. A flag pattern sort of corrects and then it moves ahead, or corrects and then it moves below, depending on whatever trend is sitting around there. And so I sort of get a feel for how the traders are reacting to price. So big wicks will tell me, all right, people are a little bit nervous. Big candlesticks tell me people are a little bit nervous. And then I'll go back to the news to see if I can pinpoint anything. And then in the first 5 minutes, I just watch to see how the traders respond to the opening bell. That gives me the sense of, okay, are they going to fill the gap? Are they going to gap and go? Are they going to sit here and consolidate for news? Are they building a new range? And that's when I get myself involved in the trade. So there's a lot of, my trading style is a lot like my personality. If somebody invites me to a party, I am the person that comes in and finds a corner in the room to sit and watch and listen and wait. And if I find, you go to a party, sometimes people are just flat out bonkers. You're like, that might be trouble. I'm sitting over here. Or you're in the mood where you go, that might be trouble. I'm heading over there. Whichever way that you're feeling it, you're going to move into that space. That's exactly how I work in the market. Some days I'll be counter trend in emotion because I love the way a support or resistance area is behaving. And some days I'll just range trade because I don't know which one is going to potentially hold. But the big mistake that I've corrected over my years of trading is not doubling down if a range breaks in the direction of an overall trend. Mm-hmm. Then you go, just take your lumps. And, it's super hard to take your lumps, especially if you feel like, I got a vibe on this market. I don't know what's happening. And it'll come in, and sometimes you get washed out, you get back in. And so sometimes when you get in and you go, I'll get washed out and I'll have to get back in, I'm just going to sit in there. And it's the one time that the whole thing blows up on you and you got 15 contracts sitting in the wrong direction. If you're trading in the futures market, that's horrific. So yeah, that's a big lesson I've learned of probably the last 4 or 5 years, because my balances would go.
Sure.
And so, it's all fine and dandy if you're there for fun, but if you're there to pay bills, then, you got to be a little bit more discerning. Yeah.
Yeah. I'm resonating so strongly with everything you're saying here. And very similarly, that same exact thing of looking for these mean reversions, fading the action. And something that hit me as well is, okay, I can do this, but if I'm looking at weekly and monthly type action and those are moving away from value, I cannot be aggressively trying to fade this action.
Yeah.
I have to be sit on my hands. And that's and then when we are on these higher time frames balancing out and there's better reasons to support we actually are in balance, that's when we can thrive a little bit better.
Yeah,
but even your conversation in your mind about, I got a vibe on this market, I can keep pushing it. Yeah, that's gotten me more times than I would care to relive for sure.
Yeah.
Let's say that you have one chart, and on this chart you could only put one product to trade, one symbol. You could only put one time frame, and you could just put one tool or indicator. And that's the thing you have to trade for the rest of your life. How would you set up that one chart?
That's a fantastic question.
Let's take a quick break from today's episode because I need to ask you a very important question. Have you ever been trading up against the hard right edge of the screen, but you're paralyzed by fear? The fear of losing money? Of course you have. We've all been there because losing your hard-earned money is a very scary thing. Thankfully, getting out there to trade and having to risk your own capital this is a thing of the past. Thanks to today's video sponsor, Elite Trader Funding, you can now get out there, learn how to trade, start trading, and even make money without ever risking your own capital. Elite Trader Funding is an evaluation company that provides traders with the opportunity to earn income by trading in a simulated environment without ever risking their own money. All you have to do is pick an evaluation, follow the rules, and then you're going to earn an Elite Sim funded account. Here, you can start profiting and you will keep the first 100% of your $12,500 in profits and then 90% of all your profits after that. And it really doesn't matter what style of trading that you're into, Elite Trader Funding is going to have the perfect evaluation for you. Whether you prefer an end of day drawdown, a trailing drawdown, something more static, they have a fast track option. They even have an option for swing trading. This is something that nobody else offers. And above all, Elite Trader Funding is a company that you can trust. You don't have to take my word for it. They have a 4.5-star rating on Trustpilot, and they have verified paid out customers inside of their active Discord community. And they're paying out up to $500,000 each and every month to their clients. Now, Elite Trader Funding has an active Discord community, like I've already said, and they have top-notch customer service. So it really doesn't matter if you're brand new to the screens or if you're a seasoned pro, Elite Trader Funding is gonna help you every step of the way. Now, thanks to them sponsoring this episode, we have a really sweet deal for everybody. You can get started today, and using the promo code ETF Korbs, you're gonna get 40% off any evaluation that you'd like, except for the fast track. The fast tracks are already very affordable as they are. Now, I've also got some insider scoop that starting in early 2024, they're gonna be launching out some major changes that are heavily going to impact the trading experience. So there's no better time to get started than right now. You can click the link in the description, use the promo code ETF Korbs, get yourself a 40% discount. And once again, a big shout out to ETF, Elite Trader Funding, for sponsoring this video. Now let's get back to the episode.
Okay, I would pick the NQ.
Okay.
I would pick a 15-minute chart, and I would pick an exponential 10 moving average.
Great.
And I think I could do it with just one, and one. Yeah.
Very good. Can I ask you about this? It seems like even in the time that I've been trading, that in the last, I don't even know when this started, but somewhat recently, last couple of years, there does seem to be a much larger interest from women coming into trading. And I think before that, it wasn't something that was nearly as popular with women. I'm just interested to know, from your perspective, have you noticed a shift of, it seems like a ton more people interested? Is it maybe the bubbles that I've been in? There just hasn't been a lot of women involved. What's your perspective on women in trading and potentially becoming a lot more popular with women?
Well, that's, my secret hope, that a lot of more women get involved in trading. What I've noticed over many years ago, I did an interview with someone that was doing a study for the Wall Street Journal in terms of women entering the trading force, because, they're just not there because it's very aggressive. You get around a lot of traders and they're just very aggressive, and women don't have that tendency to be that way in general. I have seen more women. I would like to see even more women, because there really is an empowering situation if you can just get to understanding what's going on and realizing that feelings are a lot of things that run the markets. And I have gone to my nieces, my daughters, I have one daughter who's interested in trading, but my nieces, my aunts, and they all come back and they go, I'm too scared to do that. I'm too conservative. I don't want to lose money. And I think taking that as a harness is something where you have to have a good sense of self. And I'm not really sure that that's built in women generally, culturally, a good sense of self. I don't, we could get into all of the dynamics of whatever, but I like seeing more women on the streams, and I have seen more women, but by and large, when I first started trading, for the first 15 years that I was trading, I literally was maybe 1 out of 50 people was a woman.
Sure.
And if there was a woman there, she was with her husband or she was with her mate. And so more and more, I see more women saying, you know, I'm going to give this a go. I want to give this a go. But I don't, other than them, the psyche, I'm probably going to get, blackballed for this. But I feel like the female psyche requires a sense of absolute stability that maybe the male psyche doesn't really go after. I think it's the difference in testosterone levels, right? Testosterone is really responsible for the biggest buildings getting built, but they're also responsible for the biggest wars getting started. It's good and bad, right? It's just testosterone. It's just that thing. Sure. But it's a highly creative force that naturally creates a sense of bravery. And I think those lower, how did I even get to this conversation, Korbs? But
listen, we're getting red pilled over here. What's going on? No, I totally get your point.
That's my sense of that. Yeah.
Yeah, no, it's all good. Now, being a trader that, you got the 10, you got the 20 years in the space here. When you look at your own personal trading, do you think of this as you're good and you're just managing and kind of coasting? Or are you in a position where you still have shortcomings that you're actively working on? Or is it not that you're actively working on them, but you're just managing them and making sure they don't flare up? What's kind of the journey like for you being where you're at?
I have to tell you, because I think this is the perfect occupation for me, because I'm in a constant learning state.
Yeah.
It doesn't matter who I bump into, whether it's someone who just started trading or someone who's been trading for 50 years. I can listen and go, I'm going to digest that a little bit, and I'm going to see if that knowledge allows me to see the market more clearly. So I would say every day I'm climbing. Every day I can look back at something and go, you could have executed that with a little better granularity. You could have been a little more focused because you saw the level before the market opened, but somehow you were over here drinking a cup of tea or whatever, and you missed the line because you should have put an alert prior to that line coming in. And so little things like that, I will have the tweaking event, right? So there's a tweaking event, and then there's all right, what is it in my toolbox that needs sharpening? Well, you need to learn to trade with trend better. You need to realize that break and then not be afraid of giving up your gains that you made inside of the range and just following it through on the break as you wait to let price action confirm that it is coming out of that particular level. And so that's a toolbox that I built. I build toolboxes with my options a lot, right? How gamma flow works, how the lines can absolutely shift intraday because a big player has come out and put, 100,000 options sitting at one particular strike, and it'll absolutely shift where the gamma exposure is, just like that. And you won't really realize it unless you've got those things in the back of your mind going, price action is looking different. Let me go check out the chains. And so I'm always in a state of learning. I'm either tweaking current process to go, you could have executed that a little bit better. The framework doesn't change, but my ability to engage quickly, execute at process ideals, and then exit at process ideals, that's going to vary on whether I slept well, whether I'm in a good mood, whether I'm completely focused. And those are the things I can go, you should have made sure you had protein for breakfast instead of just skipping and whatever. And then every day I'll go, all right, what am I learning about bond flow? What am I learning about macro exposure? And so I'm in a constant state of learning and flux, but not giving up the core events that go, okay, here's what happens when price action is being accepted. Here's what's happening when price action is getting rejected. Those things remain static. And I think a lot of times traders in their learning space, they pick up one style and then drop it and go to another style. And so it's like a salad bar kind of, and they never get a synergy about what might work for them in a certain time and space. It ends up being, a scope drift, and you don't really pull down into the core aspects of what you need to do. I think that's really, really hard for traders trying to find their own way.
Yeah, and I think that should be talked about maybe even a little bit more here, because there's, I think, two dynamics at play, of one, of just trying things and bouncing all over the place, and maybe even hearing a seasoned trader like you who says, I do this with options, I do this with longer term, I do this with, trading, and maybe not fully appreciating that the part of the journey that they started on, you didn't start, I'm assuming, with all of these things, but you started with something, it worked, and then you added on and put more things in your tool belt. But you did have that core thing that you were dialed in and focused on. And then I think it's just very common for some reason. The old saying, it works so good, I stopped doing it, to start doing something, to have a little bit of success with it, and then for some reason forget that the reason I'm having the success is because of this is what I'm doing. And then we just start doing other things, and then the results go away, and then we forget what the results even happen, and then we start doing something else. And you said at the very beginning, I highlighted this to circle back around to at some point, but you talk about being focused and how important that is. The day-to-day, of course, like you were describing it, but then just in general, having that core thing that as you're learning new stuff, you're not reinventing your method every time you're learning something, but you're adding depth, you're adding in additional resources, adding things that can help you with your core understanding and the skills that you've built, to take better advantage of more things the market can throw at us. And
very true.
Yeah, these are important
very
things
true. Yeah.
harp on.
The big thing, I think, is to not immediately go, oh my gosh, that was wrong, I need to do something completely different. Or, oh my gosh, this is perfect, and I'm going to do it every time. And then the next time you do it, you're like, I did the exact same thing I did last time. It didn't even work. And if you ever get to that space, your brain should go, correlation and causation are not the same thing. And just because you happened to buy at one time and it worked, and you bought at another time and it didn't, doesn't mean that those two things are either diametrically opposed or the same strategy that's just working off of different elements. So it comes back to that space that you first talked about. It's a lot of chart action, but then there's an art to taking a look at things from a big picture. I sort of say to folks, listen, look at it like it's a Monet, right? So for those who don't know the style of Monet, it's called pointillism. And he did it with these little crazy dots, right? So if you're right up on a Monet, you're like, what is that, a spill on the carpet? But as you step back, it turns into something bigger. And a lot of times traders try to drill in on these. I'm going to go to 30-second chart. I'm going to go to whatever, something very, very tight. And they lose the forest for digging in the weeds. Yeah. And that is something that you learn about yourself as you're going through that journey. Because a lot of people go, oh, if I look at the big picture, I'm looking at too much risk. Or, well, that might be true if you buy exactly where you're standing. But how about stepping back and looking for where everybody else was buying, and then go, oh, everybody else, I can see everybody else is buying there because there aren't any wicks below it. There's no candles below that level. So I know everybody's buying there. So next time I'm going to buy there. And if it drops below, well, I know they started selling there, so I'm going to get out. And it's really, if you can build a process where your anchor every day is, I want to see if I can position myself so I lose the least. If the wheels come off the bus, you're going to be hitting the gravy train sooner than you realize. It truly is. Management of risk is just so important.
Yeah. When you sit down to the markets, do you have a sort of relationship with the markets that you like to think about? Like, this is a puzzle I'm trying to solve. This is a game that I'm playing. This is a financial war that I'm stepping into and I have to go to battle. Do you have any kind of like a worldview like this when you think of the markets
Yes,
and
I
trading?
do. I think it's a game. A
Hmm.
lot of people get on me for that. Oh, we're looking at, I'm like, yeah, well, you do you, I'll do me. This is a game. And the game is I'm playing with people that have a lot more knowledge, a lot more money, and a lot bigger systems. And they're trying to pick my pocket. That's the way I'll look at the market. I'll come in there and I'll go, you know what? I'm the little third grader. Everybody else is in high school, but I know what patterns I need to look for. So I'm going to go there and I'm going to engage when the risk is smallest, because if I don't, I'm going to get hurt. And so it is 100% a game to me. And it's the reason I laugh all the time, because sometimes the market will just shred you. You'll be totally right, but the risk will be so big, it just blows you out and then turns around. And by then, all your emotional capital is in the dustbin. And you're like, oh, all right, I couldn't even have gotten back in that trade because I just spent all my capital emotionally trying to get myself positioned for this rotation. And so, as long as you manage that risk, you can go, you know what, the market punched me in the face today, but tomorrow I'm back at it. And they're not going to get me like that again tomorrow. And so my thought is, if you let the market be the teacher every day, and when you lose money and make money, sit back and go, what's the lesson? And some of us trade too dynamically to do that after every single trade. But if you find yourself in a pocket where you trade very quickly because that's just your style, after about an hour of trading, step back and go, what did I learn about today's market action that might be a little bit different to yesterday? Or are they still in the same game plan because of X, Y, or Z? And that is the key event. Just making sure that the lessons the market is charging you for, that you don't have to pay for them over and over and over and over and over again. And it literally took me a decade to figure out, oh, you probably ought to start working on that. Yeah, that's a good idea. Start working on that. Because I would make the same mistakes over and over and over and over again. Sabotage.
Yeah. When you are dealing with mistakes and having this process of reflection, is this something that is very just intuitive, or have you built maybe some frameworks around this to where, like, you have a document, you ask yourself certain questions, you make notes of it, you review it, or is it mostly just like looking through and making the mental notes and trying to do better next time?
In the beginning, it was very much, I got to write everything out. This is what I saw. Because what I did not realize was less is more. And so I used to have like 7 different indicators. Now I just have 2, right? I have a moving average and I have a momentum indicator, and that's it. And so I would start trying to like making a chronicle of every single thing. And then I made this great big spreadsheet with a grid and checked these boxes, and it just didn't give me clarity. Before I started trading futures almost exclusively from that space, I would have a basket of 200 stocks I'd look over every night. And I'd go, okay, this. And then I would have information overload at the bell and not one good trade. So now I go, okay, these 5 companies reporting. Let's see how well they do relative to everybody else. Are they running hot? Are they running cold? I'll be able to set things up from there. But then I'll go, okay, now when I do poorly, I can look at that and go, because I log my trades on my screen, I can go, okay, poor execution right here. I could make a note. But all I have to do at this point is now look at it, and then I'll put a little flag. I'll put a little flag pattern on it. And so it tells me, okay, remember what you did there? The very next day, I can see the same chart. And so it's very dynamic. I used to think, okay, you traded badly today. That means you are a bad trader. That means you're a bad person. That means, why don't you go sit in the corner and cry? And a lot of us turn our performance into an indictment of who we are. Now, that on the flip side, we do it when things are hopping too. We're like, don't question. And so we do. We run in those peaks and valleys. I'm killing it. And so we run in those peaks and valleys. And what I learned to do is sort of temper it out. And I love the baseball analogy. You're only as good as your last at bat. And so that's the thing that always keeps me to that space where you go, I know you think you know what's going on, but let's pretend like you didn't. And what if you're wrong? What would happen here? And so that's really my favorite way to frame out. If I've had days and days of just gain after gain after gain after gain, I can literally feel myself going, yes. But when I feel myself doing that, I have that little check mark where I go, hang on now. This is where the market likes to punch you in the face. Make sure that you're watching yourself. So as I make more and more and more through a good patch, I'll start using less and less size because I know the market's coming for me. So that's that discipline space. Now, once in a while, I'll forget and I'll go, crud, and I'll get a bigger size loss than I would have normally because I'm used to sizing up. But that first loss makes me go, you better watch out. Thinking too much of yourself right here. Peel back, take a look. So it's great self-regulation. Trading it taught me so much about who I was as a person, what my triggers were, where I had a tendency to get mad, where I had a tendency to be overly elated, and tempering myself inside of the space is really a daily battle. It truly is.
No doubt.
It's a daily battle.
You talked about the importance of risk. We all know risk is very important. What are your thoughts on this? Do you think it's a good idea to risk the same amount for every trade that you take? Or do you think it's an important skill to know when it's time to hit the gas and when it's time to throttle way back?
100% B, right? Never keep your risk exactly the same, right? It's not, listen, if you have a mate and they live with you in the house, some days you go, I got to give them a little bit more room. They're not feeling it. Or you think to yourself, I need a little bit of room, right? And the market is the same way. It's a fluid organism. So the key event about trading is, and listen, this is a tough skill to build. This is one of the toughest skills to build. Oh, I'm just going to risk 5 points. Oh, I'm just going to risk. Well, what if the market's telling you it's got 10-point risk because they've come in and the wicks are bigger or whatever? If the market is telling you something and you don't have enough insight to look at that and go, those candlesticks are a little bit bigger than normal. 5 points risk is not going to be able to do it for me today. I either need to be extra cheap, getting myself on the buy side, or I got to go, all right, I'm just going to, sit this one out and wait until the risk parameters are mine. But my risk changes with every single trade. Every single trade, I will go, okay, last time it looked like 5 points. This time it's holding a higher low. I'm going to use 4 points if it comes back into that same spot.
Yeah.
I'm just going to tighten it up as the formation builds its own structure, right?
Yeah.
As a structure forms, you get a better feel of, yeah, it's not going to go over there. And if it does, swerve, right? Totally out. And so that's kind of that's how I will do it. It's very, very fluid.
Sure, sure. Yeah. It's so natural to just want to crave certainty. And I just want to do this, and I just want to get this result. And learning to, I think, not just be okay with it, but just embrace, like, this is the environment that we're in. This is not the environment for certainty. This is the environment for uncertainty. And if you want to fight that, or if you're not comfortable with that, this is just really not the space. But if you can learn to enjoy that and realize, like, this is what makes this special, and and enjoy it, then you can make these kind of moves. You talked earlier about being diverse and having a lot of things going on when it comes to your trading, and I'd be interested to know from this perspective of how you feel about. I've identified, I think, one of the most difficult things for traders, especially when we're starting off and we don't have the capital that we need, we don't have things spread out the way that they should be, is putting way too much importance on any given move, any given trade, any given stop loss getting hit. And then when that importance just gets triggered and we put that massive amount of importance on something, we just get obsessed with P&L, and the idea of a process just goes completely out the window. And getting through to that place where you can build up reserves and it's much easier to release the importance of anything on any one given trade. But could you maybe talk about what your thoughts would be about this? I know you work with a lot of traders as well, and being able to, one, identify that this is happening, that whatever reason you think, well, I overtraded, well, I got FOMO, well, I got angry, I got this. It's like, yes, all of this happened because you put so much importance on this thing. You talked to it about treating the markets like a game, and not the sense that you're being reckless or totally whimsical with it, but taking the market serious, but not taking it too serious is a good balance. But anyway, if you have any thoughts about this, about the idea of what the dangers are of just putting so much importance on something and losing track of everything else, and what can be done to release that importance if you're not in a position where you have the funds to do it, which is probably the best way to release importance.
Right. So let's face it, we trade to make money, right? I mean, so I have bumped into several folks that trade because they have nothing to do and they made tons of money and they're just like, hey, I just want to have fun, blah, blah, blah. But most of us trade to make money. And it's natural that we focus on P&L. But here is the thing. And I'll take it back to sports because I have a lot of sons, and one of them actually plays professional basketball in Europe. And so when I say something's a game, I mean, he plays a game for money. And so it's serious business, but there are also things that can happen. And you have to, at some point, realize that what you're thinking about getting good at needs to begin with a process. And most people think they have a process, and they might, but they don't follow their rules. How many of us get up and go, listen, I have got to drink 15 glasses of water today, and you lay down and you're like, man, I only had 11 of those. We don't set these things for ourselves that go, you need to do that, right? Hey, I'm going to lose some weight, so I'm going to have XYZ, or I'm going to hit the gym because I want to get XYZ. And we let ourselves off the hook all the time because we don't hold process important. And I don't know, some person said a long time ago, right? Thoughts become your ideas, and ideas become your actions, and actions become your character. And so when you look through that and you go, wait a second, is my character one of a process-driven trader that looks for an entry, waits for an entry, takes an entry, and then manages a trade? Or am I, oh my gosh, that's moving up. I got to go long. So-and-so says to go long. They've been long. Korbs has been long for 30 minutes and I just got here. Okay, whatever it is, what you realize immediately is that people might have a process, but they don't follow it. So you've got to look at yourself in the mirror as a trader and go, oh yeah, I've got strategies. They're great. Okay, do you trade them? Well, kind of. Well, I mean, I can't, that rule is not really rigid because, right? And there's all this mushy stuff in the center of process. And I'll dig down with people and I'll figure out that they don't have a trading strategy. They don't have a trading plan. And so, again, that will become the idea and the thought of, well, maybe I won't exactly trade that, to the action, to the character of a portfolio that's, either going straight down or going like this. And so it's sort of that event where you have to be completely honest with yourself. I don't know if you've ever tried this, but if you go to the mirror and stare yourself right in the eyes and then tell a lie, tell a lie to yourself and feel the visceral action in your solar plexus. Every fiber of your being is going to know that's a lie. And you cannot look at yourself right in the eye and flat out lie and not feel it, especially if it's a lie about something that is character-based or action-based. Oh my. And once you get that feeling, you can go, all right, okay, I know I got to work there. Let's make it baby steps. See, some people go, oh, I got to change. And they'll build something that's, 3 miles long and 6 miles wide and just insurmountable. Giant elephant they just put in the room. Hey, listen, one forkful at a time, one step at a time into where you're going to be. And just realize that if you keep staying where you are, you're not going to be able to go where you want to go because who you are has got you in the space that you don't want to be. And that, it's simplistic. But again, the anchor comes from, can you look at yourself in the mirror and tell the truth? First, lie so you know, and then say something that you want to be true, but it isn't. And feel that visceral event there. It literally hits you right in the solar plexus. You can't, it's almost like there's an electrical charge. I have no idea why, but it's something about interacting with yourself on a very deep level that makes you go, all right, gut check. I got to make some changes.
Yeah, very interesting. I'm going to give that a try. And for everybody listening, if you go to try that yourself, and if you tell yourself a lie, and you don't have any reaction, seek help immediately. You're a psychopath. It'd be a good checkpoint for you. Now, I know you're over at the tradingbook.com. Yeah. If somebody wants to connect with you or to reach out to you or find out more about you or follow along with any content you're putting out or anything like this, what's the best place to reach you?
So I am a content mentor for the Benzinga Pro platform, but you can also find me on social media. And of course, I am on Top Step TV, and I spend a lot of time trying to interact. Oh, the Place Your Trades Discord. That's a really great Discord with a lot of great traders that are just wicked smart, just doing a lot of really, really good stuff in there. And what I try to do, I'm in this space where I really want to engage in very meaningful ways with traders. And so I love it when people come at me and go, hey, I tried that, doesn't work. And so if they're willing to sit down and go, what do you mean it doesn't work? Then, I can hammer it through that. And if you see me on Discord like that, I love engaging with the traders. It's my space of the good feeling of giving back. And I'm in great space. I'm in a really, really great space.
Yeah, very good. Listen, it was great to get to know you a little bit. Thank you for dropping all the wisdom
Same
and for
here.
shedding the time. I know we got to wrap up and get back to FOMC, but thank you so much for the time. I'll turn it over to you just to say a final goodbye, and then we'll give you the last word and we'll end it right there.
Well, it certainly was my pleasure connecting with you again. It's been a while since, I think the last time I saw you was sometime in October, maybe September, October, November. I don't know. In any case, yes, it's been superb. I love the probing questions. I think they're really, really good. Some of them made me think really hard, and I like that. I always like going, what about that? But it's fun to talk about trading. Find me on social media, and I look forward to connecting with you again.